There is so much noise out there that a lot of people seem to think a crash is coming and is imminent. I gotta say, some things are lining up for just that to happen. It is a possibility. But the real question you need answers to is not if a recession is coming or not, because sooner or later we're going to have one. But don't worry, we'll talk about that question today too, for those of you that just have to know, is a recession coming or not very soon. The question is not if the stock market crashes or not, because the market crash cycle kind of seems to be accelerating, so you will get one eventually. And I'll also answer the question of if one is imminent today too. But the question you need answers to in the end is exactly what to do about all of it and what is actually fact and what is fiction in regards to all this. So we're going to answer all of that today. Just make sure you like the video if you like getting the truth without the hype and with all the emotional roller coaster stuff that goes on out there. If you've been watching my channel for any length of time, you know that I could care less about making short-term predictions. I mean, everybody was guessing a recession was coming last year until it didn't happen, so I'm sure it's going to happen this year, right? Same exact thing with a market crash, which we actually got one in 2022, but yet people couldn't help themselves. And in October at the lows, remember back in October 2022 at those lows, they were saying it's just the beginning. It will get a lot worse. And of course, it didn't happen to end the year out. So then it was the big crash was coming in 2023, and the exact opposite of a crash happened instead, and the market rallied big time. And I know a lot of you guys, and I know a lot of folks in our group made 50%, 70%, 100% plus gains in their portfolio in just 2023 alone. And guys, I've been around forever. The same exact narrative happened in 2009 after the financial crisis and all that sort of stuff. And the same exact thing happened in 2020 after the shutdown happened. You missed out on an absolute fortune in 2022 if you were worried about a recession or the crash getting worse instead of just buying Meta in the 80s and Google in the 80s and Amazon in the 80s and Tesla at 100, which is actually, it's coming back down to 100 once again. Palantir in the 5s, Nvidia in the 100s, and on great stocks that were on a massive discount. So far, you've gotten hundreds of percentage point moves and incredible companies, best of the best type companies. Those are basically penny stock gains in the best companies in the world. And that is why I personally put more money in the stock market back in 2022 than I ever had in my entire life. 20 plus years of doing this, I've never put more money in because I knew those stock prices were once in a lifetime type of deals. I had no clue where the bottom was. I had no clue if they were going to come even better lifetime type of deals. And of course, I did not time the bottom. But the point being, that didn't matter. That wasn't what I was trying to guess. I just knew that they were great deals and I needed to ignore the noise. That's what this channel is all about. We're not concerned with guessing when the crash will bottom or if we'll have a recession or not or anything else like that. We were concerned with valuations and executing our plans and controlling what we can control instead of blindly guessing with all these pretty charts and graphs or listening to other smart folks who are also guessing just as much. And just because they use big words and throw up lots of pretty charts and graphs doesn't negate the fact that everyone is just guessing in the end. We are all guessing in the end. Nothing confirms anything because none of us can see the future. That's the important part to understand. So with all the noise and everything else going on right now, let's just look at facts, not speculation, not a media narrative or a YouTuber narrative or anything else like that. Let's look at facts around the market, a recession, and a market crash. And then we will discuss how to position yourself to really take advantage of this market that we're currently in right now. So fact number one, the market corrects 3 to 4 times every year. Look, that is the average, guys, which means we will have more corrections just this year. And if your favorite stock ran hot basically these past 4 months, your correction's going to be larger than others who are also going to correct down. But despite the market correcting 3 to 4 times last year alone, Nvidia, for example, still tripled during that time frame, which means every time it corrected, it was a great buy the dip opportunity. And yes, I promise I have an easy way to identify and pounce on opportunities just like that. But if you want to immediately see what I'm buying and see the first 2 buys in the $250 Legacy Portfolio Challenge, make sure you get your founder spot for only $15 now, as they are filling up fast, and once they're gone, they are gone forever. And I have made several buys outside of that portfolio as well that my mastermind members can see, which a mastermind membership is on sale as well right now. So check out the pinned comment and see everything you get with that and take advantage of the special pricing for the challenge before it runs out. All right, so fact number 2, the economy and jobs are still red hot and not flashing recession. Fed in the end wants to lower rates, but they have to consider slowing that or even raising rates instead because the economy won't slow down. Now, GDP is the best measure we have for economic growth overall. And I agree, it's not perfect. I wish we had a measurement out there, but all the people out there trying to, pick this little piece of data and put this little piece of data, put together their little thing that shows what's really going on, that just fits their narrative, whatever the heck their narrative is, that's garbage too. So it's not perfect, but it's the best we have. And right now we have GDP clicking in those threes, sometimes in the fours, and not the historical twos, which, just in case you were wondering, normal economic growth and a good economy is in the twos. A slowing economy is in the ones. And of course, if you go negative for 2 consecutive quarters, that's considered a recession. We are nowhere near normal, much less getting close to a recession, much less in a recession. Those are facts, and that's what the data is showing. I do see other problems just like you guys do. It's not perfect. The economy is not perfect. It's not the greatest ever or anything else like that. But this big bad recession that I've been hearing about really since the world shut down just has not happened. And there's no data showing that it's going to happen. We got one of the most benign recessions ever in 2022, and that's it. That's what we got. And I'm sure that's what'll prove all the charts and graphs, right. Historically, we did get one. It was super benign. It was no big deal. So barring a black swan event of some sort, there is not anything on the horizon that shows imminent danger now beyond the normal annual party of doomsdayers rolling out their little pretty charts and graphs that have successfully predicted 69 of the last 4 recessions and all that other crap like that. Will we get one again? Absolutely. It's going to happen again. It's part of the normal business cycle, and it's a gigantic opportunity in the end. I welcome them. It is not something to be feared, and the facts prove that to be the case. You should not fear them. Fact number 3, stock market crashes happen every 6 to 8 years. So we just had one in 2022, so we aren't due for a while, but I hear you guys out there right now, Luke. Hey, well, look, we had one in 2020 and then 2022, so it can happen more often than every 6 to 8 years. And I completely agree with you guys, but we have to look at why we got a stock market crash each time to kind of see, is there any clues in there that can kind of tell us, are we going to get one? Hey, basically, because we had 2 kind of back to back there, is it going to be like 10 years till the next one? Or is it just one of these things where, hey, there's just another one imminent and it could just happen? Let's kind of see if there's any clues there or not. So we had the dot-com crash. I know most of you guys weren't investing during that time, but I was, and it was ugly. And I covered it actually right up here in depth. And the AI hype is not even remotely close to the internet bubble back then. Again, I'm not going to rehash it. Watch that video up there. Talk to anybody who actually lived that. We are light years away from that, not even close. So let's go back to 2008, and we had the meltdown of the entire global financial system. I'm pretty sure you can't predict that. I understand Michael Burry predicted a piece of it because he saw a big anomaly out there in the market, but he had no idea how everything else was intertwined and everything else. That was just product of, hey, great call at the time, saw something a lot of other folks missed, but didn't see all the other global impact of the entire thing that, of course, exaggerated that gain, much further. But of course, he's been wrong every year since then. So I don't know, take that for what you will. In 2020, we had the shutdown of the entire world. And yeah, I'm pretty sure no chart or graph can predict that. So another black swan event that nobody could have predicted. And then in 2022, inflation went up to the highest in 40 years, and the Fed raised the rates the fastest ever here in the US. And again, I'm not sure anyone had that on their bingo card in 2021 when everyone who now says they called that was telling you to buy Tesla at 400 because, I don't know, reasons. So what is it specifically in 2024 that everybody is screaming about that's going to cause this giant, cataclysmic event? I don't really know. They just throw up a bunch of pretty charts and graphs and do the same exact thing everybody did in 2009, 2010, 2011, 2012. And every year in between all those other crash times. So clearly when you're screaming about it every year during all sort of times, did the charts actually get it right? Or were there other events like the entire world shutting down, for example, that created those crashes? Well, in my mind, the market doesn't crash in 2020 if the world doesn't shut down. So the facts show me that what is going on to cause the next crash is not known by anyone, much less a pretty chart or graph or anything else like that. Unfortunately, if you try to guess just like those folks will, you will be wrong most of the time and miss out on fortunes in between, because guessing a crash is a fool's errand and stupid. And yes, when it finally happens, the person that guessed wrong 37 times before, but finally got it right, will be there saying, see, I told you so. I told you that was what was going to happen. But they will conveniently ignore the fact that they actually went 1 for 37. While those of us that didn't play those games and ignored those complete morons went 36 for 37 and had the guts to actually buy the crash when it did happen because we saw massive opportunity. But I mean, let's be honest here, guys. How else can hedge funds sell you that they're underperforming funds that can't even beat a dead person or the S&P if they actually deal in real tangible facts? So instead, they make up all these charts and graphs and everything else so that way you think they are the expert and they tout that one time they got it right and completely ignore the 36 times that they got it wrong. I'm not into playing their games. I'm not going to play their games. And if you play those games, you might as well just buy an index fund because it will outperform all those people out there trying to play those games of timing the market and telling you where it's going and all other stuff like that. Instead, I choose to do exactly this. These are the 5 steps I take to avoid buying hype runs and then putting myself in an even better position to take advantage once again if a crash or a recession or whatever craziness hits the market. I'm ready to go. So step number 1 is do evaluation. It all starts right there, guys. I got it. I know I talk to my group a lot. That's what we do in there. We teach you exactly how to do that. Doesn't matter. If the group's not right for you, totally understand. Learn it, Google it, punch it into YouTube there. Go to a class, do something and learn how to actually do evaluation. If you do not do that, everything else we talk about and everything else you're going to do, you might as well just follow all the people trying to tell you what to do and making 37,000 different predictions and losing the market. You have to understand how to do evaluation, and that is step 1. Just learn it. Doesn't matter how you do it, learn how to do it. So step number 2 is plan every move. Once you understand valuation, then you need to plan out every single move that you make and do it ahead of time. Don't wait for something to happen in the market and then magically, with emotions and with YouTube screaming at you and with Kramer screaming at you and everybody else screaming at you, try to make decisions on what you're going to do if this happens and that happens and all this other craziness like that. Plan ahead. It makes it so easy to just buy and move on, and you don't have to worry about timing the market or emotions creeping in or anything else. And we all know emotions destroy your investing, and the only way to keep emotions as far away from your investing as possible is to have a plan and then execute to it. That's it. So step number 3 is pool cash while runs are happening. Look, we're getting some dip in our favorite stocks right now, and it's starting to become juicy opportunities in a lot of different stocks that we enjoy. So how do you take advantage of that? Well, when hype runs are happening, instead of chasing those hype runs with FOMO, right? Killing you there. That's what gets you buying at the top and then selling at the low. Instead of chasing those hype runs, pool cash. If you were buying when they were low, enjoy your gains, but understand there's going to be an opportunity to buy again on a discount. And so start pooling that cash in the meantime. Doesn't mean you can't continue your DCA if you're a DCAer out there, or other opportunities, right? Seems like one stock will run, another stock you want to buy goes down and it's in the doldrums. Well, focus your money there until this one has a little bit of dip and then refocus your money there. Obviously plan it all out like we talked about. But the point being, when these big hype runs come, instead of chasing, just pull up cash and wait for those 3 to 4 corrections that are going to happen over the course of any given year. That's kind of how you avoid that whole, do I got to sell this in order to buy this, or whatever the case is, because people are constantly overpaying for stocks. And then when the dips come, they don't want to sell and take the loss and then buy the dip. It just puts you in a very, very tough bind there. And you don't want to be in that situation, which leads me perfectly to number 4, which is work on your money loop. Look, the worst thing you can do is be a long-term buy and hold investor, which we've shown repeatedly here, and the statistics show that that is the best way to invest. That is the most profitable way to invest year in and year out. Your returns are going to be better than anybody else's by just simply doing that. But if you aren't constantly mastering your money and turning your money to a point where you have enough money to invest every single month, and it doesn't take a whole lot of money in order to make a lot of money over the long run with compounding and everything else in stocks. But if you aren't working on those money loops constantly, then you're going to constantly be in a pickle and have to sell this to buy this, which essentially means you're just a trader, which means you're going to underperform the market over the long run. Sure, you're going to have some winning trades. I'm not saying traders lose all the time, but over the long run, if you're constantly having to do that to raise money instead of creating more money loops coming in to pay you, you are going to always be behind the 8 ball and having to make very tough decisions of having to trim a winner in order to buy a potential, great stock that's on a discount there. And it may or may not work out for you. I remember hearing people specifically doing it with NVIDIA when it was at 250, 350. I don't know what they put their money into, but I doubt very seriously after they paid taxes, and even if they had no taxes, I doubt very seriously the money they put into it, even if it was into another great stock, has paid off nearly as well as it would have just keeping the money in NVIDIA. Work on your money loops and don't say, well, it didn't apply to me right now. You're right. It may take you 2 years to build out your money loops, but yourself 2 years from now will thank you a whole lot if you go ahead and start working on them today. If you wait for 2 years to work on them, you'll have another excuse as to why you can't do it. And before you know it, you're 65, you're still trying to play trading games and you're behind in your retirement. And I don't want you guys to be in that spot. And number 5, pounce when the fear is high. Look, I cannot emphasize this enough. There's no situation, no scenario to where just everything's going to go to zero and everything else. And if that does happen, the least of your worries is the stock market. That won't matter. All your little cash that you have pulled up that you just waited for this doomsday scenario to play out, it isn't going to mean anything either. It's completely dead money as well. So you tell me a time in the stock market where the fear was high and the stock market started cratering when that wasn't a great opportunity. Pull up any chart, S&P chart, pull it up there, take a look at it. Take a look at 2008. Tell me that wasn't an incredible opportunity to buy. Take a look at 2020. Tell me that wasn't an incredible time to buy. Take a look at, I don't know, Black Monday back in the 80s. Tell me that wasn't an incredible time to buy. Every single time, that is the time to pounce. Are you going to time the bottom? No. Nobody's going to time the bottom. I never have. I don't think I ever will. However, all I know is that I bought during those high fear times, and every single time without fail, 100%. The only thing that's 100% in the stock market was those shares are worth a lot more today than they were when I bought them, and it was a great time to buy. Every time the bottom right, sometimes I didn't even get the stock right, and it still put me in a better spot long-term after that. So you have to be willing to pounce when the fear is high. And if you want a complete support group helping you pounce when the fear is high, make sure you check out the link for my membership down there, where masterminds get 5 free courses. They get direct access to me anytime they want, live Q&As. They can jump in our free coaching that we have for all those members. They can take part in a $250 challenge along with our market experts as well. They get 3, 4, 5 videos a week from me that are just exclusive, just simply for the group. The best 6, 7, and 8-figure Discord out there, helping you get through all those times, and so much more, guys. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.